Let's bring in Deirdre Bolton from the New York Stock Exchange, also from Matson Money, the CEO, Mark Matson, Fairfax Global Markets CEO, Paul Dietrich also joins us. Paul, start with you on this, and that's kind of the theme today. It's funny, the themes seem to change day to day, but if all our talk about economies slowing down and the U.S. maybe being on the brink of some sort of a recession, then maybe we were way ahead of ourselves on that. How do you view things?
Well, we are slowing down. We went from almost 3% growth last year, and we're going to go down to about 2.4, 2.5% growth this year. But people forget that during the last 4 years of the Obama administration, we had 2.2% growth, and we had a bull market during that period of time. So, you know, we're seeing a slowdown in growth. We don't have the tax cut this year that kind of boosted earnings and everything else, but this is real growth.
The story out of China, Deirdre, was interesting because that surprised a lot of people. Everybody's been talking about how much trouble that economy is in. Not to say it was a blowout figure, but any kind of expansion at all came as a surprise.
Yeah, that's a great point. Kind of, I mean, first of all, it was a surprise. So already we had that positivity coming into Monday morning from that. And then it was also the fastest growth in manufacturing for 8 months. So not only was it a surprise, but that's a, you know, that's a pretty significant marker. So a lot of the traders here this morning were talking about that, saying, listen, we didn't even really have to look too much at the pre-market action just coming in today. We knew this was going to be a day in green, and that's certainly what we're seeing. And even just looking at the breakdown, if you like, of sectors that are outperforming, you know, financials doing particularly well, also industrials, that's another very strong spot, and energy, as you've been talking about with some of your guests, price of oil.
Mark, what's your read?
Well, Connell, you said it. Surprise. All the knowable and predictable information is already in stock prices. So when a surprise comes up, markets go up. Investors need to be diversified long term. And that doesn't mean just the United States. That means diversified internationally. So China, Asia, Europe, most investors are too hyperly focused on the U.S., and they miss the global diversification opportunities.
Let me ask you as sort of a follow-up, Mark, on that, about what if we do get this trade deal in the relatively near future with the Chinese, I'm saying in the next couple months, say, is all of that priced in already, therefore it wouldn't be a surprise? What do you think the market has in the system already?
Yeah, Colin, the market is an amazing information processing machine, and it's all in there. Only unknowable things in the future are going to change prices. So don't, you know, predict the next 100%. The next 100% is always up. No one can tell you accurately where the next 20% is.
Except Paul Dietrich. He knows, so I'm going to ask him next. What do you think, Paul?
I think that if there's a trade deal and we're seeing manufacturing expanding in the two largest economies in the world, China and the United States, that's going to be a real boost, and I think we're going to see a really good 2019.
I mean, you could make an argument, Deirdre, that this all delays it a little bit because neither side has as much motivation. I don't know how much truth there is to that, to sign the deal as they would say, you know, let's just say from China's point of view. If you're China and your economy is a complete disaster, the whole idea has been, well, we better get this thing done yesterday. But if your economy's not as much of a disaster, you've been able to provide the stimulus, then maybe you don't have the same motivation and you can hold out for better terms. What do you think?
Yeah, that is certainly, I'm sure, playing on both sets of leaders' minds. We do know these talks are continuing, but I do still think, listen, okay, we got one positive economic data point. Again, it is on manufacturing, so we can't ignore it, but that's just one piece of the puzzle. And I do think the world's two largest economies do want to find some kind of framework. It is definitely in both sides' best interest. I hear what you're saying, that maybe China gets a little bit more wiggle room ahead of the talks later this week. But by all accounts, both sides do want at least something set up that both sides understand.
You know, Deirdre, the market's doing great. The stock market's doing great today, up 260. But the other thing, I think we can't ignore rates either. Is there a sense from people you're talking to that interest rates maybe have bottomed out here? Or?
Well, yeah, and I think that's mostly what we've heard from the Fed, right? The last time that we heard from the chairman, Jay Powell, he basically said no more interest rate increases this year and, you know, maybe one, maybe two next year. So I think once that has kind of been adjusted for, that's part of the reason why we are seeing financials a little bit higher. I mean, it is a rising tide lifts all boats kind of environment.
Yeah, we're at 249, Mark, 250 on the 10-year note. I mean, we didn't know where the bottom would be, but maybe we have found it, which would be important for stocks and for the economy as well. Everybody was talking about an inverted yield curve last week.
Yeah, it's hard to predict interest rates too, but I don't see any long-term inflation kicking in. But investors should be diversified globalists. Look, U.S. stocks 146% on the S&P the last 18 years. International small stocks 320%. Emerging market stocks 550. So stop trying to predict interest rates. Start looking globally to invest your money.
I'm getting the theme there from Mark Matson. I see where you're going. All right, Deirdre, Mark, and Paul, thanks to all three of you. We appreciate it.